Welcome back to Investing Talk podcast. Today, we are looking into Tempus AI, that high flyer in the AI healthcare space. Our mission really is to figure out, based on the sources you gave us, is Tempus AI actually a good buy right now? We're going to unpack the growth, the risks too, and this data moat they seem to have built. And hey, before we jump in, if you like what we're doing here, please hit subscribe, give us a like, drop a comment. Seriously, if there's a company you want us to analyze, let us know in the comments below. We really do read them.
Yeah, definitely let us know. And Tempus AI is, well, it's a fascinating one to tackle right now. It's kind of a poster child for high growth AI in healthcare diagnostics. I mean, the performance has been just wild. Shares are up, what, 201% year to date?
201%.
Right. So that immediately makes you ask, okay, is this valuation justified? Has the market gotten way ahead of itself?
Exactly. That 201% jump really highlights the core issue we found in the material. You got this incredible revenue growth, right? Market adoption seems clear. But then there's this consistent lack of profit. It's strategic, maybe, but it's still a loss. And that tension, that's where the real story is. Okay, so let's get into those fundamentals. The growth side, like you said, is hard to ignore. Tempus AI reported trailing 12 months revenue. It's almost $1 billion, $951.98 million. And that's nearly double year over year. For a company in this complex tech space, that's really moving.
That top line growth is definitely impressive. It tells you they're landing big clients, selling those platforms. But we have to look at the other side, the bottom line. It's still pretty deep in the red. TTM net income is negative $199.73 million. That translates to an EPS of minus $1.18. So understanding why the market seems okay with that loss, for now anyway, is crucial.
Right, so why is the market rewarding a company that's burning through nearly $200 million a year?
Well, the idea, is it's a strategic loss. The sources point out this isn't uncommon for these really fast-growing AI firms, especially when they're trying to grab market share. It's less about failing to sell things and more about just pouring money into R&D. Research and development, they're trying to lock in future scale, get that operational leverage down the line. So the company's basically choosing to fund future tech, build out that data moat, even if it means profitability takes a backseat for a while. But, and this is important, that strategy only works if you've got the cash to sustain it. Despite that huge $16.75 billion market cap, the good news is the sources say they have a pretty significant cash cushion after their recent equity raise. And critically, no major debt issues. That gives them a ton of flexibility. They're not worried about keeping the lights on. They're focused on innovation and outpacing competitors.
Okay, that makes sense. Investing in the future, basically. But investors won't wait forever, right? How long can this go on?
That's the million-dollar question, isn't it? Or maybe the multi-billion-dollar question here. There isn't a set deadline, exactly. But what investors are probably looking for is a shift in how that R&D money is spent. Moving from just foundational discovery, building the core platforms, to focusing more on commercialization, optimization, getting products to market efficiently. Once you see that shift, it suggests profitability is becoming a real focus. The big near-term thing everyone's watching is the next earnings release. It's scheduled for November 3rd, 2025. The expectation is they'll show continued strong year-over-year revenue growth, which would kind of validate their current path.
Gotcha. So keep an eye on that November 3rd report. Now, shifting gears a bit, that financial flexibility you mentioned ties into their competitive strategies, aggressive expansion. And it seems to start with that data moat. You described them as a leader in AI-powered molecular diagnostic sequencing, cloud analytics, clinical data. What makes their data so special?
Well, lots of companies collect genetic data, right? That's becoming more common. But Tempus AI seems to have cracked something tougher. They link the molecular and genomic data with actual patient outcomes over time, and importantly, with de-identified clinical notes from electronic health records, EHR data. That connection, knowing the mutation and how the patient actually responded to treatment over months or years, that's the powerful part.
Yeah, so it's not just the what, it's the what happened next.
Exactly. That's their proprietary insights platform. It's why big pharma and research clients seem to stick with them. Pharma companies can use it to speed up drug discovery, essentially running queries against real-world patient data. And honestly, it looks like they don't have a direct competitor doing this at the same scale in the U.S. Getting and linking that kind of detailed clinical data is incredibly hard and expensive for a newcomer.
And they're not resting on their laurels. We saw notes about strategic moves like acquiring Paige. That's the AI digital pathology company.
Yeah, that Paige acquisition was significant. It beefs up their data set even more, especially adding expertise in imaging analytics. It's about consolidating different data types.
And then there's the regulatory side, a big win recently, right?
Huge. They got FDA 510K clearance for their RNA-based XR-IVD platform.
Okay, 510K. What does that mean in practical terms for them?
So 510K means the FDA agrees their device is substantially equivalent to something already legally on the market. It's not the full, super long pre-market approval, but it's a major step. It strengthens their competitive position, raises the barrier for others, expands how their tech can be used clinically, and gives it that regulatory stamp of approval, which helps with market adoption.
Okay, so strong fundamentals, a unique data advantage, regulatory wins. Let's connect that to the market reaction. The technical momentum looks just as strong, like we said, up 201% year to date, and they hit a new all-time high just recently, week of October 6th, at $104.32.
Yeah, technically speaking, the trend is undeniably bullish. The analysis points to a trading range, sort of a bullish channel, between roughly $90 and $120. The current price, around $96, maybe $97, is sitting comfortably above both the 50-day moving average, which is around $78.50, and the 200-day, way down at $61. Seeing it above those averages confirms this strong uptrend is, well, intact and even accelerating. For traders watching closely, resistance looks like it's up around the $112 to $120 area. Key support seems to be holding near $90 to $93. Getting convincingly above 100 no-filers could spark a move towards that upper resistance.
And speaking of market sentiment, there was that interesting, maybe slightly controversial signal from Nancy Pelosi's trades. Public filing shows she bought a good chunk of call options back in January 2025, and those positions were up, what, nearly 185% by October? That kind of timing? Well, it certainly gets people talking and can add to the bullish feel.
It absolutely does.
Yeah.
It's a very visible, very public signal of confidence from someone, influential. But it's also fair to point out, as the sources do, that this kind of high-profile political trading can sometimes bring extra noise or scrutiny, whether justified or not. So while it's a bullish data point, it could potentially add a layer of volatility if it becomes a focus for reasons unrelated to the company's fundamentals. Something to be aware of.
A fair point. But it's not just one person, right? What about broader institutional support?
No, definitely not just that trade. We're seeing strong institutional inflows generally. Big money seems interested. And the analyst community is pretty much aligned. Out of 14 analysts covering Tempus AI, 12 rated either buy or strong buy. And many of them bumped up their price targets after that FDA news broke. So yeah, the professional analyst view is firmly bullish right now.
Okay, so fundamentals, moat, technicals, sentiment, a lot lining up. What are the specific things investors should watch for, say, over the next 3 months? The catalysts.
Right, the potential triggers. First up is definitely that Q3 earnings call on November 3rd. The big thing there will be seeing if that strong year-over-year revenue growth continues. Hitting that billion-dollar run rate would be psychologically important too.
Makes sense. What else?
Second, keep an eye out for more product pipeline news. After the recent FDA clearance, you'd expect to see maybe additional regulatory filings for other things or results from clinical validation studies. News about expanding the use of that XR-IVD platform would be positive.
And third, you mentioned rumors earlier.
Yeah, the persistent rumors about potential partnerships. There's been chatter, apparently, about formal deals or licensing expansions with major pharmaceutical companies. The kind of companies that desperately want access to that unique EHR-linked data Tempus has. If any of those rumors turn into actual signed contracts, that could be a significant immediate catalyst for the stock.
Okay, potential upside clear. But let's be balanced. You can't look at a 201% gain in negative earnings without talking seriously about the risks.
Absolutely not. You have to weigh the risks carefully here. The number one risk is still that profitability timing. It's just unclear exactly when they'll achieve sustainable net income. Given how much they need to spend on R&D and winning customers, that uncertainty is a real concern. Investors need to watch guidance closely.
And their whole model relies heavily on getting those regulatory green lights,
Yeah,
right?
correct. That's the second major risk, regulatory dependency. They need approvals like that 510K for the new diagnostics. Any significant delay or worse, a rejection from the FDA or other bodies, that could really hit momentum and sentiment hard. It makes the stock sensitive to regulatory news. And third, we have to mention the legal side. The sources flag some emerging shareholder litigation risk. An investigation was launched recently for long-term stockholders. Now, that's not a finding of wrongdoing yet, but just having that legal cloud hanging over the company can definitely weigh on the share price. It's an execution risk to monitor.
Okay, and one more.
Yes, short interest. It's noted as being elevated. Now, that can cut both ways. If good news hits, it could fuel a short squeeze, pushing the price up fast. But it also means there's dry powder on the sell side. If earnings disappoint or guidance weakens, those shorts can amplify the downward pressure. It adds a layer of potential volatility.
So, putting it all together, the explosive growth, the moat, the tech, the risks, what's the final take?
Looking at everything, the sources seem to converge on a strong bullish outlook. We'd rate it maybe an 8.5 out of 10. The rationale is really that combination, the incredible top-line growth, that defensible data moat, which is hard to replicate, the very strong technical picture, and these near-term catalysts like earnings and potential partnerships.
So, for you listening, how should you approach this? Is it a quick trade or a long hold?
Well, the interesting thing is it seems potentially attractive for both. For tactical trading, say 0 to 3 months, you could play the momentum around earnings, news flow, maybe those technical breakouts. But given the underlying business model, that unique data asset, and the long-term trend towards precision medicine, it also fits the profile for a long-term growth compounding strategy, thinking 3 years out or even longer. And maybe one last thought, a bit speculative based on those rumors we mentioned. Given how valuable that unique data asset is, their market leadership and the cash they have, the sources mention ongoing whispers about takeover interest, from big med tech firms or maybe even large AI conglomerates who need that kind of data. So the provocative question for you to ponder is, how quickly does Tempus AI need to sort out its profitability path before that amazing data moat just becomes too tempting for a much bigger player to swoop in and buy?
An acquisition endgame. Definitely something interesting to consider as you watch Tempus AI. Well, that wraps up our analysis for today. Thanks for tuning in, and we encourage you to keep exploring this fascinating intersection of AI and healthcare